Hey everyone, and welcome. Today, we're diving deep into a founder's journey. We are literally going to build a business from the ground up. In Turkey, this country is fast becoming a real hotspot for international entrepreneurs. So let's walk through exactly how it's done. So if you've ever even thought about taking your business international, or maybe launching something brand new abroad, this is for you. We're going to tackle that one big question. Could Turkey actually be your next big business frontier? Let's find out together. So why Turkey? Well, the reasons are pretty compelling. First off, just look at a map. It's this incredible strategic hub, literally bridging Europe, Asia, and the Middle East. The market access is just phenomenal, but it's way more than just geography. We're talking about a really dynamic, growing economy, a high-quality workforce, and a government that actually offers solid incentives to foreign investors. But you know what the real clincher is? Turkish law guarantees that foreign investors have the exact same rights as local investors. It's a level playing field from the moment you start. Okay, let's get down to your first major decision. Before you do anything else, you have to pick your company's legal structure. And listen, this isn't just about paperwork. This is the foundational blueprint for your entire business. Getting this right sets the stage for everything that comes after. For most foreign entrepreneurs, the choice really boils down to two main paths: the limited liability company, or LLC, and the joint stock company. You guessed it, the JSC. Which one you pick? Well, that depends entirely on your vision, your ambition, and the scale you're aiming for. So here's how you should think about it. The LLC is simpler. It's absolutely perfect for startups, small to medium-sized businesses, and you can have up to 50 shareholders. A JSC, on the other hand, is built to scale. There's no limit on shareholders, transferring shares is way easier, and this is the big one. If you have dreams of one day going public with an IPO, a JSC is your only path. Now let's talk money. For an LLC, the minimum share capital you need is 50,000 Turkish lira. But here's the really nice part. You have up to 24 months after you register the company to pay that capital in full. That's a huge bit of breathing room when you're just starting out. For a joint stock company, though, that number jumps way up to 250,000 Turkish lira. And here's the critical difference, the thing you have to plan for. You must pay at least 25% of that capital before you can even register the company. That's a significant upfront cost you need to have ready. Okay, you've picked your company type. Now it's time to run the gauntlet of official registration. I know, it can look like a huge bureaucratic maze, but honestly, it's a very clear, step-by-step process if you know what you're doing. Let's break it down. So the whole path really boils down to 5 main steps. First, the prep work. Nail down your company name and draft your articles of association. Think of this as your company's constitution. Second, get all your documents in order. Get a tax ID for your shareholders and have everything translated and notarized. Third, you apply online through Mürsis, which is Turkey's central registry system. Fourth, you go and register in person at the Trade Registry office. And finally, you open that all-important corporate bank account. Do those 5 things, and you are officially in business. Okay, I need you to pay very close attention to this next part because it is, without a doubt, the #1 reason applications fail. Every single foreign document you have, I'm talking passports, powers of attorney, you name it, must be professionally translated into Turkish and then notarized by a certified Turkish notary. There are 0 shortcuts here. This is non-negotiable. All right, your company is officially registered. Pop the champagne, celebrate. But the work is not over. Not by a long shot. Now it's time to play the long game, and that means managing all your ongoing obligations to stay compliant and, actually succeed. Operating in Turkey means you've got to understand the financial landscape. So, plan for a 25% corporate tax on your profits and a standard VAT rate of 20%. On top of that, there are withholding taxes, especially on things like dividends. And for every single person you hire, you have to factor in Social Security contributions, which add up to about 37.5% total. You absolutely must build these numbers into your business plan from day one. Now, this next rule is absolutely vital for any founder who plans on hiring foreign staff, and that might include yourself. If you want to get a work permit for just one foreign employee, your company has to first employ 5 Turkish citizens. 5 to 1. Just burn that ratio into your brain. For every 1 foreign work permit you want to get, you need 5 Turkish citizens on your payroll. This rule is going to fundamentally shape your hiring strategy and, of course, your budget. So we've covered the what and the how. Now it's time for the insider's edge. Let's talk about how to avoid the common mistakes that trip up so many foreign entrepreneurs. Here are the top 5 pitfalls you need to watch out for. The very first mistake can happen right at the beginning, picking an LLC because it seems simpler when your 5-year plan really screams for the flexibility of a JSC. If you think you might bring on a lot of investors or even go public down the line, starting with an LLC means you'll face a really costly and complicated conversion process later on. It's a huge headache you could have avoided from the start. Mistake number 2 is all about money. Underestimating your capital needs. It's not just about knowing the minimums. Forgetting that a JSC needs 25% of its capital paid up front is a classic oversight. It can cause a massive cash flow shock and can seriously delay your entire launch. I know we've said it before, but it is so important, I'm going to say it again. The top reason for rejection is improper documentation. A missing apostille stamp, a slightly off translation, a tiny notary error. Any little mistake can send your application right back to square one, costing you weeks, maybe months, and of course, more money. The fourth mistake is getting tunnel vision. So many founders get hyper-focused on the setup process that they totally forget about ongoing compliance. Missing a VAT filing or a Social Security payment might not seem like a big deal, but it can lead to some really heavy penalties that just eat away at your profits and create serious legal problems. And finally, mistake number 5, putting off the bank account. It sounds like such a small, simple task, right? But it can literally paralyze your business. Without that account, you can't deposit your capital, you can't receive payments from customers, you can't pay your staff. It is a simple bottleneck that can bring your launch to a screeching halt. Okay, now for a pro tip. This is a powerful strategy that a lot of entrepreneurs completely overlook: Turkey's free zones. The best way to think about them is as special economic areas that are legally considered outside of Turkish customs territory. They are specifically designed to supercharge businesses that are focused on exporting. And the advantages here are just massive. For manufacturers, we're talking a 100% corporate tax exemption on your earnings. You pay 0 customs duty and 0 VAT. You can transfer your profits abroad without any restrictions. And generally, there's a lot less bureaucracy. Seriously, for an export-focused business, operating in a free zone can be an absolute game changer. So what's the most crucial takeaway from all this? Well, our sources were unanimous on this point. Navigating this whole system requires real expertise. A good local lawyer is your most important guide. Getting that professional guidance isn't an expense. It is the single most critical investment you will make in your company's success. So there you have it. We've covered the why, the what, and the how. You now have the blueprint, from picking the right company type to navigating the registration and avoiding all those common mistakes. So really, the only question left is, what will you build?